All right.
currency.
I don't know if you purposely did that to talk about digital currency because
Uh,
now you've got me completely flabbergasted as far as mentally. Did you say Bitcoin mining?
yeah, so like the
Yeah, you're gonna have to explain that because I thought Bitcoin was just something that they created on the interwebs and
well, that's what they call it. They call it Bitcoin or cryptocurrency mining, and it's essentially using computers to create or solve these large math problems. And by solving those math problems, utilizing energy, you're rewarded with coins, so the digital currency. So it's it's called mining, and it really is, but it's like digital mining.
okay, that makes me feel a little bit better because I was
Yeah.
like, man, if we're strip mining or something to create Bitcoin, then we have gone in a very interesting direction. Uh,
There,
so
yeah, there is a lot of focus. Just a quick note, there is a lot of focus these days on kind of like the energy and carbon footprint of Bitcoin mining. So like a Ethereum, for instance, recently, or I think it's still in a test. They just did a test on it, but they're kind of restructuring their whole system in a way that's going to be more energy efficient, and I think reduce the energy usage by about 98% to um, run the system and create the coins.
all right, well, let's talk about it. It's not necessarily an area that. So let me give perspective from a regular average person or somewhat average person on Bitcoin and crypto and things. Um, when it first came popular, when I say popular, to the general public about 6 or 7 years ago, um, it seemed more of anything else something that rich people do
Yeah.
to get richer and not necessarily something that, like, if you had the opportunity to get into it, you're already too late.
Yep.
And even over the past few years, it seems like whether it's Bitcoin or a different type of crypto, that unless you're in on the original kind of investment or whatever, that it's always too late to be in it because by the time you get in it, you're going to lose money or you're not going to make up as much. On top of that, it seems like a rich person fad, coming from someone that I'm firmly in the middle of middle class. um, and I know a little bit of the history of it, but why is Bitcoin so sexy? Why is it something that we would even consider talking about when we talk about energy and stuff? I know you mentioned some of the footprint, the carbon footprint, but wouldn't that be enough of a reason that we should just completely abandon crypto? So let's talk about that at some.
Well, you're right. There's a lot of, it's kind of like been a first mover thing. So um, for instance, it's kind of funny story. There's a guy that had a hard drive with, I don't remember how much, but it was basically a couple $100 million worth of Bitcoin on it. And he threw it out. So he spent years, like I think he raised money to basically scour the landfill trying to find this hard drive. And that's something that he's done for years. So but it's definitely a first mover. I would say a first mover thing. And um, I do think like it's kind of restructuring uh, the wealth a little bit, but really like the people that were able to buy Bitcoin at a substantial level, it's kind of like it definitely is a rich getting richer too. So I think it's kind of a little bit different because a lot of times we see traditional rich versus nouveau rich. And I think there's a lot of like tech entrepreneurs and stuff that were already wealthy that plowed a lot of money in there. But it's I mean, it's kind of like the non-fungible token
Oh, we're not
NFTs.
going to start that one yet. We'll come back to
What do you think?
NFTs because that one I'm actually a little bit more knowledgeable on. So maybe all this
Yeah.
will help me even feel more intelligent on NFTs. But
But I just real quick, I think um, I read something, I think it was today, but it was basically saying that the top 10 wallets, so like basically what everybody holds in terms of coins is public, where you can see the wallet. You can't necessarily see who owns it, but the top 100 wallets own about 15% of the outstanding Bitcoin. So that's, that's kind of like, there's a lot of people that have this wealth kind of off the books, just sitting there. You don't know whether or not it's, if they still have access to it or whatever. But there was a pretty funny, funny
So
story.
we don't know if they have access to it.
So you have a secure key,
Okay.
basically. So like that guy throwing out his hard drive, that contained his keys to his Bitcoin on it. And
Oh,
if you lose the key, then you lose access to your Bitcoin. So
okay.
there was another funny story. I was watching Bloomberg years ago, and Matt Miller was a commentator on there, and he was talking about Bitcoin, and he bought like a $20 Bitcoin sort of thing, but he held up the QR code. It was kind of like a gift card almost, and someone scanned it through through the TV and stole his Bitcoin. So by the time that he got to log into his account, his Bitcoin was already gone, which was pretty funny. One of my favorite moments on TV. But yeah, I I think it really is, it is a rich person's thing. Like
So
it definitely does have a lot of applications. Like the decentralized finance stuff is really interesting. And really too, it's there's a good way to think about it. So if you own US dollars, it's a fiat currency. Like the US basically needs to print more money to continue their operations. So from a rudimentary sense, you're always getting poorer if you just hold dollars versus holding dollar denominated risk assets. Bitcoin is like, just using Bitcoin specifically, there's only X amount of Bitcoins that are ever going to be minted, and they're at, or mined, and they're at over 90% now. So theoretically, it's kind of the inverse of the US dollar. So the more scarce they are, the more money that they should be worth in the future. So,
okay.
so like if you use it as how much can I buy a loaf of bread for in US dollars, like typically that's going to go up by 2 to 3% a year. And then there's years like this where that's up dramatically.
Right.
But on average, the Federal Reserve targets about 2% inflation. That piece of bread, theoretically, over time, should be cost you less Bitcoin. So
Okay.
as less Bitcoins are mined, the price should go up. And it's kind of an inverse relationship on that too.
So we're going to need to unpack a little bit of your statement because I know for you it makes easy sense, and I think it kind of makes a little bit of sense to most of us, but just want to make sure I've heard correctly. So Bitcoin's value, or I know value, that's going to get tricky. So you'll have a lot to unpack. All right. So when you're saying that my dollar decreases basically every time more money gets printed, did I hear that correctly? Like my
Yeah.
dollar bill? Okay. Now, if my dollar bill is in my checking account, so I don't see it, does it basically stay the same amount or does it still become less?
Well, this is really kind of a discussion about buying power. So your dollar is always worth a dollar, right? Unless you have it in some yield bearing asset.
And a
But
yield bearing asset,
so like
again,
a,
non business guy.
so like a, let's say like a bond, for instance, where someone agrees to pay you something in the future, some sort of asset that goes up in value. So like when the Federal Reserve has low interest rates, very low interest rates, money is considered cheap, and a lot of people lend it. And they typically use those to go buy, you'd say, risk assets or real estate, stuff like that. But savings accounts, which are also a function that the amount that they pay on that is a function of the Federal Reserve federal funds rate. Um, you're basically not earning anything on your savings account right now. So it's just kind of like, yeah. So in that sense, your buying power, if you only hold cash, is going down because inflation is eating away the value of that dollar.
Okay. That part I can grasp for the most part. Um, now, now is there a step in between increasing my buying power without going straight to Bitcoin? Like, would stocks or something like that be considered something in between there, or
Well, your buying power of dollars is always going to go down, essentially, with inflation.
okay,
So as long as we have a inflating rather than a deflating economy relative to our currency, um, you'll always be earning less money. So
okay,
you're,
okay, I get that.
yeah. So you just earn more money
So
essentially.
then we go into the markets like gold and silver, for instance, and that's kind of like a more tangible version of Bitcoin. Would that be correct?
Yeah, gold was always considered an inflation hedge, so that as inflation rise, like gold was kind of a fixed value asset. Um, that hasn't really, like, it's turned a little bit late recently in the last year or two, but it hasn't really held its traditional kind of store of value like it used to. So Bitcoin is considered like digital gold because there's a fixed amount, or there's a fixed amount. Like gold, there's relatively a fixed amount too. So you think, like, when there's not extreme amounts of gold being flooded on the market, that it's going to stay relatively the same value
Right.
and rise up and down with the price of basically the value of the US dollar. So when you talk
Okay.
about value of Bitcoin, it's kind of like the same thing as a dollar, but its relative value to currencies, since there's a fixed amount, is, theoretically always increasing with inflation. So that's why people really refer to it as digital gold.
Gotcha.
Yeah.
Okay. And just something that's kind of interesting. I don't remember which president it was, but when I was reading through all the presidents, um, there was I want to say it was Theodore Roosevelt, but he's the first president to have broken away from the gold standard. Where
Nixon.
no, no, it was in the early 1900s, that where the gold standard, the dollar became actually stopped being based purely on the gold standard. It was I think they switched back to it, and then Nixon went to the more dramatic route. But and I said that I'm not going to back it up. But all you listeners out there, if you figure it out, help me prove myself right, because that's what's important here right now. Um, okay, so if Bitcoin is one of these good, it's the digital gold, so to speak. Other than, and this is where my mind's going to probably always have a little bit of issue, because I don't ever plan on being rich enough that Bitcoin is going to be anything. Now, okay, so when we say, like you said earlier, there's again several things to unpack here. So Bitcoin is at about 90% capacity of how much Bitcoin there can be. Is that all cryptocurrency or just Bitcoin specifically? Because I want to make sure.
Yeah, it's just Bitcoin specific.
Okay, so other cryptocurrency still has room to potentially grow and whatnot.
Yeah, cryptos are just different. There's, I think, like thousands of them now. So, like the main ones are typically, or really, Ethereum and Bitcoin. And Ethereum is kind of looked as, uh, there's a lot of potential development paths to develop products and stuff off of Ethereum. Um, I I think that Ethereum blockchain is a large backing for a lot of NFTs, but don't quote me on that.
I'll
But
only quote you as much as my gold standard gets quoted,
yeah,
unless we're correct. Okay, so realistically, how much money in current dollars, and we're talking about late March of 2022, how much money should someone make before they should honestly consider buying into Bitcoin or Ethereum to get to the minimum where it's worth doing it, as opposed because maybe it's smart to do it even when you make minimum wage or something, but it seems like you have to be at least X amount of rich to even consider buying into these things.
Well, you can buy, so it's fractional, so you can buy as much as you want. Like you, like one Bitcoin, I think is like over $40,000 right now. But
So I could
but
buy like 1/1000th of a Bitcoin and just pay $4.
well, yeah, you can.
Oh, really? Okay,
Yeah.
I did not know that.
So it's you can buy as small as denomination pretty much as you can. So it's fully fractionalized. Um, so you don't like it's not like the US dollar where you get $1 or you can buy 1 cent. And whatever that currency sort of stuff is, there's fractions of it that you can purchase. So I mean, there's a lot of people making money trading Bitcoin with very little money because it's so volatile. The volatility is very high on it that it really makes a good asset to be a day trader on. But like with everything, a lot of people lose their shirt doing that stuff too. So that's highly risky. I know one person that that bought a lot into Bitcoin when it was about $60,000, and it's 40, so they're kind of licking their wounds on that. But
And I know we're talking a lot about this, and by no means, at least I'm definitely not a financial investor, so I want to make sure that that's clear.
yeah,
I'm
this
just
isn't
looking at,
financial advice.
yeah, I'm just looking at this purely from the lens of me thinking of myself as a rich person in one sense, but a very poor person in this kind of sense. And if I were inclined to buy lottery tickets, I know a lot of people buy lottery tickets every week and stuff. Using that money to buy Bitcoin would probably be just, I mean, you can't really lose anything, right? Because at the very least, you can eventually sell, like, if you bought the equivalent of one Bitcoin over a year, um, even if it went down in value, you would still get something back as long as there's somebody willing to buy the
Yeah.
Bitcoin, right? Whereas if you buy a lottery ticket and you lose on the lottery, you're just out the money and the
Well,
expense.
the expected value on a lottery ticket is usually negative.
Right, right.
So
Yeah.
so there's pretty much a guarantee that you're going to leave with less money that you put in.
So no matter how much you make, if you had disposable income at all, and whether it's Bitcoin or some other crypto, um, as long as there's somebody that's always willing to buy the thing, there's at least some value. It's not like cleaning out your grandparents' house after they die and like, oh man, they have all this crap that
They have a hard
um,
drive full of
yeah, yeah. Um,
cryptocurrency.
because even if someone buys it for cheap, it's still something. Whereas you can, I mean, I can't tell me estate sales I've been to where things have been almost given away at the end because nobody was really interested in the product and whatnot. So in that kind of way, Bitcoin is a safe,
Yeah,
a safe investment.
I don't know. Like I think it really depends on whether or not it's I wouldn't I wouldn't Bitcoin is an investment based on risk tolerance now.
Right,
So it's still like far above where it's ever been. And I don't think that um it's really been fully tested right now. Like
right,
you've seen some countries implement it as a currency because their own fiat currency is basically like worthless, right?
right.
So
Would that be
it's
like Greece or
uh I'm trying to think. I don't know if it was Colombia or Ecuador. There was a country that did it recently. Like there's certain countries like Zimbabwe, who's been notorious for having 1,000% inflation. Like that you know,
Well,
that's a place where you would want to own crypto, and if you can use it in your financial system to buy goods and services, that's a good thing. Like historically, in countries like this, if you can get your hands on US dollars, people would use that because it's like real money. So one of my friends is grew up in Cambodia, and they paid for a lot of the stuff that they bought with US dollars. Venezuela too, in recent years, like there's been a lot of um, trade in dollars because it's just nobody wants to own the Venezuelan currency. So it's just like money is a weird thing, and it could always change on a dime. Like China is outlawed crypto in their country and replaced it with their own dollar, digital dollar. The US is working on programs the same too. And I would say the biggest risk in first world countries or developed nations is really whether or not it's going to be legal to own it. So it's really it's a competing asset with the country's dollar and their ability to fundraise what they need to have to keep their economy going.
but because we know people, we know the psychology of people, if something can buy something, it doesn't matter if it's illegal or not. People are always going to have that. I mean, maybe they'll have an offshore's bank account. Oh wait, they already do that kind of stuff. You said a statement, and maybe it was a slip up. I'm kind of hoping it was a slip up. You said that it's not like real money, and that's what always gets me scared whenever we start talking about Bitcoin, crypto, and whatnot, because it's like it's real money or it's the equivalent of real money, but this is always on the kind of the barter system of as long as somebody is willing to buy it, it's real money. In the same
Yeah.
like if I have a bottle of water and someone's dying of thirst, but they have $1 million at home, they're like, yes, I'll give you $1 million for that bottle of water. As long as they're somebody that needs the Bitcoin or the crypto, it's got value. But there is potentially I mean, even if it wasn't illegal necessarily, but that it could be worthless just like that. Is that correct?
Well, yeah, that definitely was a slip up, but it does
Okay.
kind of trigger something in my mind is that I think when you talk about traditional money and traditional currencies, they're so we do have a fiat currency, but I think it still says on the notes, it's like full faith and credit of the United States. So essentially you're buying a dollar that's kind of buying the legacy and history of the United States in that. And there's not really any value backing uh, crypto necessarily. And there's not a lot of value necessarily back in the US dollar, but it's just a different you're
Well, that makes a
yeah.
little bit of sense since you said it's on the faith of the U.S. government for the U.S. dollar, and I would assume, what a rupee or whatever is in India, it's based on the faith of the Indian government.
Yeah.
So that makes sense. That one of the notes you had given me was that a lot of the value that comes for Bitcoin and crypto is the fact that people don't trust their government um, and the fiat money printing issues. And so,
I think there's a lot of people, especially in the US, that are kind of anarchists, and that may not be the greatest thing, but there's a lot of people that expect the US to fail, and I feel like those people are more inclined to invest in Bitcoin because it's decentralized, so it's kind of like the people's currency in a way.
okay,
And because it's really built on there's a lot of like technical advantages to it. So being able to transport across countries without transaction costs. Like there's a lot of efficiencies to using the blockchain to transport money around the world. And that's why I do believe that you see a lot of banks investing a lot of money in not necessarily cryptocurrency and crypto trading, but really in the technology behind it, because they see ways that they could potentially modernize their operations and their ability to clear money between two parties,
Right.
you know, knowing where it goes and stuff like that. So there's a lot of interesting stuff behind the technology. And Bitcoin itself has been, I mean, it was only $500 a couple of years ago. So it's been a really good investment for those people that have had faith in it for a long time.
Right. As pretty
And
much most quality products, you know, if you don't,
yeah,
if you're willing to wait, it will sometimes benefit you longer.
yeah. So there's a guy I met years ago that sold a financial institution to John Hancock, and I think he cashed out like $400 million,
Wow.
and it was a good payday, right?
Right.
So I met him at an event, and we were talking about, like, I was like interested. I was like, so what do you do with your money? And he was like, well, I believe in the future of the US government. So I just put it all in T-bills, and I get uh, so treasury certificates
Mm-hmm.
where he earns a couple percent off of those every single year. And that basically gives him the income that he lives off of.
Wow.
So his thought was, I don't want to spend all this time managing money and stuff like that. Don't want to pay a lot of fees. I just want to keep it simple. So I'm going to put it in T-bills and live off the interest, and that's going to be more than enough for me to live the rest of my life.
Okay.
Which you know, a couple of percent off $400 million is a lot of money.
Right.
Like that, it buys a pretty good life.
So let me take a little bit of a rabbit trail. Hopefully, we'll get back on. I remember when I was in college, I got to go. I didn't get a lot of scholarships, but I got a scholarship for one thing, and one of the things is we had to go to the banquet or whatever to sit with the donor, the person who gave the scholarship. And I think it was like for $200 or something like that. I don't
Yeah.
even think it was like a huge scholarship, especially for my college, a private school. But I was listening to him talk to somebody else, and he set up the endowment fund or whatever, where basically he had finally hit the point where he'd put in enough money that he no longer had to spend any money on the scholarship, that just the interest from the endowment fund would automatically pay the scholarship every year. And I wasn't the only recipient of that specific scholarship. It was like for several people. But is that kind of what we're talking about here? Is that there's like the T-bill thing where there's a
Yeah.
fund set up, and does that also lose money because there's so much money already put in there? So when inflation happens, does it cover for that, or is it still cause some of these same issues that we've been talking about?
Yeah. So, you know, if you're only at low interest rates, and I really don't know if interest rates can really ever go back to where they were in the 80s, where they were over 10%, because, you know, the US would bankrupt itself. We wouldn't be able to afford to pay the interest on uh, T-bills yielding 10+%.
Right.
So it's really kind of like a factor of inflation. So if you're earning more than inflation is eating away every single year, then
Then you're fine.
technically you're preserving your capital.
Okay.
And if you're not spending all of it, then it's kind of it, yeah. So it just depends like that. So like there's yeah, I know some people that have kind of set up endowments like you're talking about too. They got to a point where it was fully endowed and the money just kind of like sits there. So with with a lot of like wealthy people, they'll, for estate planning sort of issues, or issues if they're business owners, they'll set up kind of trusts like that too, where the trust basically they'll use like lifetime gifting in the United States to maybe put 5, 10, 15, $20 million into a trust. And that's deducted against a lifetime giving cap. But it kicks off interest. So it essentially allows the trust to buy assets in a way that can be efficiently transferred to the next generation. So like that, either that or, well, typically they would do that with like life insurance premiums.
Mm-hmm.
So it kicks off enough money that you can buy life insurance to pay for the asset, or they can gift business or other assets that they think are going to increase value into the trust. And there's tax efficiency to that. So whether it's endowments or trusts, like there's a lot of financial maneuvers in the US that utilize that, basically like kicking off a couple of percent off the assets to have a plan to afford something for the long term.
Is that one reasons why, like when we see movies and TV shows talking about like you can't touch the money until you're like 25 or something? It's because it's in a trust, and so they're kind of living off of the interest or something like that.
It depends. Like a trust, you can write whatever rules that you
Oh,
want
okay.
for it.
So there's
So
so
it'll
it's
be
like, hey, I finally complicated this or uncomplicated this. And it's like, oh no, it's more complicated. Oh, okay, great, great.
yeah. There's a lot of stuff like that where it's kind of like they don't necessarily think you'll be mature enough to handle it, so you just don't get access to it.
And that's fair because I spend my money quickly, even when I don't want to. Um, all right, so back to Bitcoin and crypto for a little bit. I guess part of it, my mind. So you have to have the keys. Is it something that, as long as you have the keys, whether that's, I'm guessing, can a key fit onto like a hard drive? I know nothing
Yeah,
about this stuff,
it's just
so
it's numbers.
okay. So, but I mean, it's not going to take up like 20 gigs for
No,
just a key. Okay. So theoretically, as long as you have a secure connection and the key, you could access your Bitcoin, or do you have to have a specific kind of laptop or computer power to be able to access it?
no, and like you do for, well, I guess technically everybody could mine off, I think, any computer as long as it has a minimum requirements, but they build specific like mining rigs um, for mining Bitcoin that
Okay.
are optimized for mining Bitcoin. So with most people hold their Bitcoin in a Bitcoin wallet that's tied to something like a finance institution, or like a finance institution, like not traditional finance, but there's like Binance and stuff like that, kind of trading platforms where you
Mm-hmm.
can have all your crypto from Bitcoin, Ethereum, whatever, Dogecoin, all in kind of the same place. And that's, essentially the same theory as like a TD Ameritrade account.
I guess part of my imagination is thinking when people wouldn't, they don't trust banks or whatever, so they keep their money hidden in different parts of their house. And I'm kind of like imagining like you go into somebody's attic and there's a long password, it's all the numbers for their their Bitcoin. It's like, oh, I didn't mean for you to find that in between my mattress and my box spring.
Yeah, you could, or you could put it in a tin can and bury it in the yard in a hard drive or something.
Oh, that just the mental pictures of some of that is great. Um,
Yeah, my grandma and grandfather on my dad's sides were products of the Depression.
hmm.
So we found money buried in one of their homes in the yard when we were younger,
Oh
and
wow.
they had hidden money all over the place because they didn't
Yeah, they're
believe in banks that much, which ironically they owned banks for their assets too.
oh wow.
So stock and banks. So it's kind of a funny thing that they hid currency like silver coins, which are actually, worth pretty decent money now. But
Right.
so it was like 1962, I think, was the last year that they moved away from uh, primarily having silver in the quarters. So those I think are worth like about $10 a piece now,
Goodness.
just for the quarters. But yeah, it was funny.
So and like there's so I guess I'm getting a bit more understanding of Bitcoin. Get it? Bit more of Bitcoin. Ha!
uh,
And everybody else understands this is groaning. All of a sudden, there's a collective groan as they listen to this part of the podcast. We're like, "Are you okay?"
oh,
Yeah, there's just a really bad pun on this really cool podcast I listened to with Matt Jensen and Mike McVeigh. Um, but I guess my mind is still limited right now of seeing the benefits. I mean, I get the notes of it's not trusting into a fiat based economy. I get that. I get maybe it's like we don't trust the government that holds up the currency is going to stand. And I because we've seen Brexit with EU and we've seen some of the different things that has done. So I can see how when you have this exchange this currency of money that's based on something that everybody was sharing together, and then one country that has a lot of power leaves that, and I think they're, from what little bit I've read or kept up with, they're doing okay. I mean, it's not great, but they're doing okay. They're able to mend some of those wounds and continue on. But it just seems like, so I get that part. The part I'm having a hard time is, like, how long has, we'll say Bitcoin specifically, like how long has Bitcoin actually been around?
I think it was either 2007 or 2009 when the white paper was first written for it.
Okay,
So
so just about 15 years then,
yeah,
give or take. And um, and I know that right now everything in the world is headed towards more of this cryptocurrency kind of method and stuff. I guess I'm kind of curious. Let's say the rich get richer and government currency and stuff goes down, and maybe it's 30 years from now, maybe it's 50 years from now, but somebody has Ethereum and another one has Bitcoin and another one has Jensen coin, because obviously you're going to be amazing and have a new coin after you. Um,
probably
how does
not.
the how does the trade between these different cryptos work? Because there's no other currency. All there is this crypto. I know that's, again, it's another world that I'm creating, but how do you change out on that? Because I bought Bitcoin when it was $500 a coin, and now it's worth 60,000 or 50,000. But 10 years from now, 20 years from now, it's worth $1 million. But then Ethereum is only worth half a million. I just don't. I mean, because if you don't have something to base what the value is, how then do you have value?
Well, so you would switch it to fiat currency.
Okay, so it would have to still go back to a fiat
So it would
style
go to
currency.
US dollars or yeah, some sort of intermediary where you could exchange
Okay.
like with a lot of financial institutions now, um, you'll be essentially buying, let's say, so use example, if you have uh, like a TD Ameritrade account, like typically they're going to carry a lot of securities on their books themselves. So if you're kind of in your portal, you'll be buying it potentially from them. Like this was kind of like a thing that was frowned a lot about on the um, financial crisis, was because they would mark it up internally based on the market, and
Right.
you'd think you'd be buying it at some price, but then a couple cents here or there leads to big profits. But typically you're not really like exchanging directly with the stock exchange, and there's just like this whole institutional framework to it. So
So
I it functions pretty typical to the way it does now, but in the same way that you buy food at the store, there's kind of an agreement that, you know, your dollars are worth what this loaf of bread is. And you kind of agree on a price in exchange for it.
So, okay. I think I've got that part down now. And just in a few more hours, we'll have Bitcoin completely solved, and then we can go on to Ethereum. Um, I'm going to ask a stupid question because everything in my life says that the way that something gains in value is supply and demand. And is that the same for cryptocurrency, that what gives it value is supply and demand?
Well, there's a limited supply and there's more demand. So you've
Right.
seen crypto's gone way up.
Okay.
And but it really, you know, it depends on what people think it. Same with fiat, right? So if people thought the US dollar was worth nothing tomorrow and
Hmm.
everybody was trying to sell dollars, then there's a supply demand imbalance. And
Right.
what you saw with using Bitcoin, since it's the most popular one recently, it was up almost going up towards almost $100,000 per coin. And, you know, the demand kind of fell out and now it's been 30 to 40. So kind of a, like if you would go a little bit deeper on some of the international money flows, like in this Russian sanction package recently, the US cut off Russia from SWIFT. And SWIFT is just a messaging service,
Hmm.
but it's basically the way that you transfer payments between country and country throughout the US financial system. So Russia is still able to trade dollars, but not use SWIFT. China also has one too. And what they really do is facilitate trade in kind of a, I guess, a more stable fashion. So you're seeing globally now, um, like I think it's going to be more and more of a thing, is that people are going to be utilizing um, the Chinese version of it more than the US. And with Russia too, we kind of have pushed them into having to use that.
Right.
But with this whole thing, it's it's kind of a downside, I think, with the sanction stuff, is because the US has been the reserve currency for quite a while now, and it's really shifting more to China. But you see a lot of, like India, for instance, after these sanctions went into effect, they said, you know, we're going to start trading oil with Russia and rupees instead of using the US dollar, because we're not allowed to do that anymore. So it's kind of an attempt to unbank Russia,
Okay.
and it did really affect a lot of their banks. But you're kind of, it's a weird thing where you're kind of pushing people to work with this other group that, you know, the Chinese seem to be willing to work with anybody. So um, Bitcoin's kind of a way to get, or the blockchain's kind of a way to get out of that, because there's not this, technically, this government intermediary that runs a system that can basically cut people off from it. And
Right.
I think, I don't know whatever happened with it, but someone told me that Canada recently tried to do that with their protests, their trucker protests, which was basically cut off access to bank accounts and Bitcoin for the people affiliated with that. I didn't do any investigating on myself, so I don't really know how that worked out. But um, for a lot of people, there's an inherent value to being not a part of the financial system. And that's, I think, really why you've seen so much illicit activity occur in cryptocurrency, because it's kind of like a black box. Like it's fully, uh, fully transparent who has the money and where the money's
Hmm.
flowing, but you don't really know what it's buying for it.
Right.
So you know, in the US currency, they would see that you're buying drugs and maybe show up to your house, but it's really kind of been a good utilization for trading in illicit activities that would show up on uh, a terrorism report or a
Right.
illicit drug
Right.
report or something
So
like that otherwise.
it still comes back to, so if like you said, China is making it illegal, there's some other countries looking at making it illegal. By making it illegal, that means, at least for the most part, that if I have $60,000 worth of Bitcoin, or 60 billion worth of yen or whatever, rupees, but that country has it as illegal, then I'm not going to be able just to. I have basically dead money as long as whatever fiat system is out there, it doesn't accept it.
Yeah, it kind of depends. Like, I think the biggest effect would be that institutions wouldn't be able to hold it. And there's a, you know, the institutional market where money is kind of concentrated wields a lot of power in finance. And with them entering into the market in recent years, that's definitely led to both the legitimacy of it as kind
Mm-hmm.
of like a store of value and something to trade in and utilize as an investment, but also the demand for it too, which surely affects the price in a positive manner. So there's a, you know, part of the reason I think, um, like if you know, if you're trying to trade in a currency or a stock or stuff like that, it's good to really know where institutional traders are really putting their money. And
Right.
you could see before the recent crash and Bitcoin that there was a lot of institutions saying that it was overpriced. And, you know, for me, that was a good indicator that the price would go down because, at least in the short term, because institutional money would be pulling out.